Welcome back to the Deep Dive. Today we're tackling a really fascinating one. It's about a material called antimony, crucial for everything from, well, bullets to batteries.
Yeah, and specifically the company right at the heart of the North American supply chain, United States Antimony Corporation. The ticker is UAMY.
And the backdrop here is just kind of wild. Antimony prices have shot up nearly 300% in, the last 13 months or so.
Exactly. And a huge part of that story is China. They control something like over 60% of the global supply, and crucially, they've been restricting exports. So this isn't your standard commodity boom. It feels more like a geopolitical supply crunch hitting a really critical mineral.
Right, and the stock price definitely reflects that excitement, maybe that panic, sitting at $12.01 as of October 24th, 2025, which really tees up the core question for this deep dive, doesn't it?
It does. Are we looking at UAMY as just, a speculative mining stock riding a temporary wave? Or is this something much, much more fundamental, like the cornerstone of a new, secure North American supply chain that's essential for national security, for the green transition, all of that?
That's the mission then.
Yeah.
We're going to do a deep, fundamental analysis using our value investing framework. Look at that $12.01 share price, the company's journey from being a pretty niche miner towards this ambitious goal of being a vertically integrated strategic asset.
Let's get into it.
Part 1, Fundamentals.
Okay.
Chapter 1, Business and Industry Analysis, Securing America's Critical Mineral Supply.
All right.
So let's start with what seems like the absolute bedrock of the bull case, this domestic monopoly they have. UAMY owns the only 2 operating antimony smelters in North America. How big a deal is that, really?
It's huge. It creates this massive infrastructure moat, right? And what's really interesting is their model. They're fully vertically integrated. They mine it, they mill it, they smelt it, and then they market the final product.
Capturing the whole chain.
Exactly. It lets them capture margin all along the way, sure. But more importantly, it means they control the logistics and aren't dependent on, say, Chinese processing capacity, which, as we said, is where the big global vulnerability lies right now.
Okay, let's talk products. What are the actual things driving demand here beyond just the price spike?
Well, antimony's got some critical uses.
Mm-hmm.
Their main product is antimony oxide. It's essential as a synergist in flame retardants, think plastics, textiles, paints. You need it for high fire safety standards.
Okay, important stuff.
Definitely. And then there's the defense angle, which you can't ignore. Antimony metal is used to harden lead in things like military ordnance, bullets. And antimony trisulfide is a key ingredient in ammunition primers. So if you're the U.S. defense sector and you need a reliable domestic supply, UAMY is basically the only game in town.
Interesting. Now, our sources say globally, UAMY is actually pretty small fry, less than 1% of the market, but domestically.
Domestically, that tiny share is strategically vital.
Yeah.
The value proposition here isn't about being the cheapest source, it's about being the secure source. Reliability, mitigating that huge geopolitical risk tied to China and Russia.
Right. Defense contractors, key industries, they'll pay a premium for that security, presumably.
You bet they will. It's risk management.
And this is where the government angle really locks things in, isn't it? Antimony is officially a critical mineral in the U.S., but the really big point, sources highlight this, is that it was specifically exempted from those huge 2025 Liberation Day tariffs.
Yes. That exemption is so telling. You have to understand, those tariffs were broad, aimed at penalizing certain countries, mainly China, or maybe protecting struggling U.S. industries.
Right.
Exempting antimony specifically, that signals the government doesn't see UAMY as needing protection. It sees UAMY's output as something the U.S. needs access to no matter what trade fights are happening. It's almost like an implicit government backing. A government-created moat, really.
Which makes that moat incredibly hard for anyone else to cross.
Right.
Why is it so durable?
Well, 2 big reasons. First, geology. Most of the world's antimony reserves are, inconveniently, in China and Russia. Second, regulation. UAMY's smelters have been operating grandfathered in since the 70s. Trying to permit and build a new antimony smelter in the U.S. today, you're talking years, probably hundreds of millions of dollars navigating environmental regs. It's a nightmare. So UAMY's existing assets are practically irreplaceable in the short to medium term.
Chapter 2, Management Evaluation.
Okay, leadership. This is crucial for the growth story.
Absolutely. Because to justify that stock price, you don't just need a good business. You need, an aggressive team executing flawlessly. So let's talk CEO Gary C. Evans, appointed late 2024 December. And the average tenure for the whole management team is pretty short, like 1.6 years.
Yeah, that definitely signals a change mandate, right? This isn't a caretaker team. Evans himself is described as a serial entrepreneur. He's got a history in capital markets, took 3 energy companies public, spent over 2 decades at Novavax. The clear message is, transform this company, scale it up fast.
But, serial entrepreneur can sometimes mean high risk. Our sources do point out his track record isn't spotless. He led companies like Green Hunter Resources, Blue Ridge Mountain Resources. Both ended up in bankruptcy.
That's the rub, isn't it? It's absolutely high risk, high reward. The market isn't valuing UAMY based on its, frankly, poor historical operating performance. It's betting heavily on Evans' future ability to raise money, make deals, and execute this turnaround. It's a bet on capability, not history.
And that capability, well, it seems to be showing up in their capital allocation. They're definitely on the offensive, acquiring new claims, Montana, Alaska, even Ontario. And that proposed deal for 90% of Larvado Resources looks like a clear move to lock down future feedstock.
Very aggressive. And importantly, they're funding it the right way through equity raises, not piling on debt. They pulled in about $69.25 million, and their debt-to-equity ratio is incredibly low, just 0.03. And here's a really strong signal of confidence. That last $25 million offering, it was led by a big mutual fund, and they priced it above the market price at the time. That tells you institutions are willing to pay a premium to get in on this story.
Okay, so the strategy is aggressive, funded, and getting institutional buy-in. But what about actual efficiency? Historically, that's been a weak spot. The trailing 12-month return on invested capital, ROIC, it's negative. Like negative 1.86% to negative 2.36%.
Exactly. And that's the crux of the execution risk. All this new capital, this new strategy, it absolutely has to generate significant positive ROIC going forward to make any sense of the valuation. The old UAMY wasn't efficient with capital. The new UAMY has to be radically different.
Chapter 3, financial analysis.
All right, the numbers. Brace yourself.
Yeah, this is where if you're a traditional value investor, you might start feeling a bit dizzy.
Yeah.
Let's just state the disconnect plainly.
Okay, market cap. $1.67 billion. Trailing 12-month revenue. $25.73 million.
Billion with a B, million with an M.
Yeah. I mean, it's clear the valuation isn't based on what they're doing now. It's entirely based on massive future expectations, hyper-optimistic ones.
Just look at the relative valuation multiples. The price-to-sales ratio is 68.61.
68! Let that sink in. The market is paying almost $69 for every $1 of revenue UAMY earned last year. It's astronomical.
And compared to the industry?
Well, the specialty chemicals industry average price-to-earnings ratio is around 45. UAMY's forward PE, looking ahead, is projected at 92.38. It's just a huge premium. It basically prices in years of flawless exponential growth already.
So the market clearly thinks we're at, or just past, a major inflection point. Do the latest numbers offer any hope for that?
There are glimmers, yeah. TTM revenue growth is impressive, 134.91% year over year. But the really key moment, the one the bulls hang their hats on, was Q2 2025.
What happened then?
They reported $10.53 million in revenue. Okay, solid growth. But crucially, they eked out a positive net income, $181,560.
Tiny profit margin, like 1.72%. But it's black ink, not red. Why is one quarter so vital?
Because, historically, UAMY has been all over the place with earnings, mostly negative. They've struggled with cash flow, burned cash in 4 of the last 5 years. So seeing any quarterly profit is that first crucial show-me data point. It suggests maybe, just maybe, the turnaround is starting to work, but it needs to become a consistent trend, obviously.
Right. One quarter isn't enough to justify the valuation, but it's a start. On the plus side, though, the balance sheet does look strong.
It does. That's the counterweight to the speculative valuation. The actual financial risk seems low. Current ratio is healthy at 2.21. They can cover their short-term bills. And that super low debt-to-equity of 0.03 gives them a ton of flexibility. No crushing debt burden here.
Part 2, the investment case.
Okay, shifting gears a bit.
Chapter 4, market sentiment.
How's the market feeling about all this?
Well, it's fascinating. You look at Wall Street analysts, and the consensus is overwhelmingly strong buy. Seems bullish, right?
You'd think so. But then you look closer, the average 12-month price target from these same analysts is actually way below where the stock is trading now, somewhere between $7.50 and $9.26, while the stock's at $12 in 1 month.
So they're saying buy, but also it's probably going down.
Kind of.
Yeah.
It shows the analysts are sort of chasing the stock's momentum rather than leading it. They're struggling to justify the current price with their traditional models, even though they like the story. It highlights the speculative element.
And that speculation makes it a real battleground stock. The short interest figures really drive that home.
Oh, absolutely. Short interest is incredibly high. Depending on the source, it's somewhere between, say, 13% and nearly 17% of the float. That's almost 20 million shares betting against the company.
Wow. So you've got this deep divide.
Exactly. The bears are looking at that crazy valuation, the history of losses, the execution risk, and they're screaming bubble. The bulls are focused on the strategic moat, the geopolitical necessity, the growth potential, the government backing.
And that high short interest creates its own dynamic, right? Potential for squeezes.
Definitely. Any piece of good news, any positive catalyst could trigger a short squeeze, sending the price rocketing even higher, purely on technical factors, makes it extremely volatile.
Speaking of technicals, where is it trading relative to key levels?
Right now, it's just dipping below its 50-day moving average, which is around $12.05. So maybe a little short-term consolidation or pause.
Longer term.
Longer term, it's still significantly above its 200-day moving average, which sits around $9.49. That confirms the underlying uptrend, the one that really kicked off when this whole antimony supply crunch became obvious, is still very much in place.
Chapter 5. Ownership structure.
Who actually owns this stock? That tells a story too.
We mentioned institutional money coming in through those offerings. How significant is that shift?
It's pretty dramatic. Institutional ownership jumped by over 71% in just one quarter. They now hold over 26% of the company. And we're not talking small shop.
Or the big names?
You're seeing BlackRock, Vanguard, Morgan Stanley establishing or adding to positions. BlackRock, for instance, increased its stake by something like 259% in a single quarter. That's serious institutional validation of the strategy. These are the so-called strong hands getting involved.
Okay, that's significant. But for me, the really powerful signal often comes from the insiders. What are they doing?
That's arguably the most bullish signal here. Insider ownership is already high, around 16.6%. But look at the transactions. CEO Evans, other key insiders, they've been consistently buying shares on the open market. Evans himself bought 100,000 shares just last month, September 2025.
Buying, not selling.
Exactly.
Yeah.
And maybe even more telling, there have been zero insider sales reported since 2021. None. They are putting their own money firmly behind this turnaround story. That's incredibly strong conviction.
Chapter 6. Risk assessment.
Okay, let's try to pull the threads together with a kind of SWOT analysis: strengths, weaknesses, opportunities, threats.
Good idea. Let's start with strengths. What are the core pillars?
Clearly, it's that North American smelter monopoly, that unique position, and the clean balance sheet, giving them financial firepower.
Weaknesses. What keeps the bears up at night?
Well, the long history of unprofitability and cash burn is a big one. And, as we've hammered home, that incredibly rich speculative valuation that leaves absolutely no room for error.
Opportunities. Where's the blue sky potential?
Huge geopolitical tailwinds, the push for secure domestic supply chains, massive secular demand drivers from EVs, green energy, defense spending, and potentially maybe UAMY becomes a consolidator, rolling up other non-Chinese antimony assets down the line.
Interesting. And threats. What could derail this?
Execution risk is number one. This is a complex expansion and integration plan. Can they actually pull it off efficiently? There's also commodity price risk. What if antimony prices collapse? And that high short interest we talked about is a threat too. It can exacerbate downward moves.
What about macro risks? Inflation, interest rates?
Sure, those could impact input costs or make future financing more expensive if they needed it. But again, that unique geopolitical angle acts as a bit of a shield. Remember the tariff exemption. It underscores that UAMY is operating in a slightly different reality than many other companies because of its strategic importance. It provides some insulation.
Chapter 7. Conclusion.
All right, time to wrap it up.
Let's summarize the arguments. Give us the elevator pitch for the bull case on UAY.
Okay, the bull case. You've got an irreplaceable strategic moat with smelters. You have powerful geopolitical tailwinds and government backing, evidenced by that tariff exemption. You're seeing hyper-growth kick in, albeit from a low base. And you have strong, committed leadership validated by heavy institutional and insider buying.
Okay, now the bear case. Why should investors be cautious?
The bear case. Look at the history years of unprofitability. Look at the valuation it's priced for perfection, utterly speculative. The execution risk on this ambitious plan is enormous, and you're highly dependent on volatile commodity prices staying elevated.
We ran our educational DCF model, the discounted cash flow, just to get a sense of theoretical value ranges. What did that spit out?
Well, it showed just how wide the range of potential outcomes is. The bear case scenario landed around $5.20 per share. The base case was $9.50. And a very optimistic bull case got up to $14.75.
So with the stock trading at $12.01.
It's sitting well above that base case value. The market is clearly pricing in significant success, maybe not the absolute best case scenario, but certainly anticipating very strong execution and continued favorable market conditions.
So the final takeaway.
I think the investment here isn't really a bet on a typical mining company or commodity producer. It's much more a strategic calculation. Are you betting that management can successfully build this cornerstone enterprise for a new, secure North American critical minerals supply chain? Because that's what the price implies, and it all hinges on their ability to execute.
That leads perfectly into our final provocative thought for you, the listener. Given that the U.S. government clearly sees antimony supply as a national priority, look at that tariff exemption again. What other government levers might come into play to support UAMY? Could we see things like dedicated infrastructure grants, maybe production subsidies, or even long-term mandated supply contracts from the Defense Logistics Agency beyond what exists now?
Yeah, the potential for more direct government support is definitely an intriguing X factor here. Adds another layer to the strategic upside, potentially.
Definitely something to think about. All right, that's all the time we have for this deep dive. If you found this analysis useful, please do us a favor, like and subscribe to Stock Analytics AI.
And don't forget, for just $4.99 a month, that's about $4.99 US ES, you get access to our entire playlist. That's 500 deep dive videos covering every single stock in the S&P 500.
That's right. And coming up next, exclusively for our members, we're tackling the NASDAQ 100 stock by stock. Plus, members can request deep dives on specific stocks. Just drop the ticker in the comment section and we'll get on it for you.
And one final, very important point. Please remember that this analysis was generated by an AI system. It's intended for educational and informational purposes only. It is absolutely not financial advice.
Please do your own thorough research or consult with a qualified financial advisor before making any investment decisions. Thanks for joining us on the Deep Dive.